Why does the average investor earn just 4.6% a year on stocks when the market grows 8% plus on average? Because Wall Street and the so-called investing experts lie to you. This is the first in our series, the 5 biggest lies told to investors. I'm starting with one of the biggest myths in investing and why you'll never reach your investing goals if you follow it. Turn on almost any investing show or blog and they'll try telling you that investing is all about the investment. What stocks to buy, how to get rich in real estate or Bitcoin or whatever. It's bull, and it's going to keep you from making as much money as you should. Let's look at why Wall Street lies to you on this one first, and then why it's bunk and what you can do to be a better investor. Joseph Hogue here with another video. I want to thank you for joining us for our first of this Stock Market Basics series and the lies Wall Street tells investors. If you want to read ahead on some of these stock market basics, I'm linking to all 10 in the description below. These are some hugely important investing lessons. So let's get started and let's talk money. So why does Wall Street lie to you about the stock market basics? Why would all the investing channels, all the investment analysts and experts want to lie about a basic rule of the stock market? Why do they want you to think investing is about what you invest in? 2 reasons for this. First, because investing is an entertainment industry. It's not about you making money. It's about promises of getting rich. It's about making it exciting. It's about bringing you back to that channel or website. It's about some TV personality throwing shit at the camera and leaning on a button that makes crazy noises. That's what keeps you coming back for more, and that's worth billions in advertising dollars. The second reason Wall Street lies to you is because how do you think they make money? Brokers make money when you buy and sell. They get a commission from every share you buy and sell. Even in other assets like real estate, there are people making money every time you buy a new property. Now, I was part of this machine. I managed a team of 6 investment analysts in a sell-side research department for a venture capital firm. Now, sell-side research is just a bunch of analysts sitting around pumping out free stock research. The company then uses this research to get investors excited about buying and selling stock. The more excited you are, the more often you buy and the more commissions that company makes. This is a big part of Wall Street. So why don't those investments matter? It's great to find that hot stock and make those triple-digit gains. Shares of Facebook jumped 50% last year, and we won't even talk about the 20-fold explosion in Bitcoin. But one investment doesn't mean jack to a goal of lifetime wealth. Making that 50% return is spectacular, but it's insignificant in reaching your investing goals. Think of it this way. You have $100,000 and want to get to $1 million by the time you retire in 20 years. You have your money invested exclusively in 20 stocks, so about $5,000 each, which is a terrible plan, by the way, but we'll get to that some other time. Even a 50% return on a stock is only a gain of $2,500 here. That's not bad, but you've still got $897,500 you still have to make over those 20 years. So Joe, that only means I just have to pick the right investment for all my portfolio and keep doing it over the next 20 years. Yeah, that's not going to happen. It's thinking like that, chasing stocks and always trying to find the best investment. That's the reason the average investor only makes that 4.6% return each year, even as stocks produce those double-digit gains. A better way of investing isn't the what, it's not the investments you pick, but how you invest. This means how much you match your investing goals with your investments, how much you put in stocks, bonds, real estate, and other investments. It means how often you invest and how you take advantage of the free money in tax-advantaged retirement accounts. Now, I know this isn't nearly as sexy or exciting as picking a stock that supposedly is going to double your money, but this is what real investing is all about. So let's look at just a few stock market basics, a few simple rules for how to invest to reach your goals. First is asset allocation depending on your age. Now, an asset is just a big group of investments. Stocks are an asset, bonds are an asset, real estate is an asset. Each asset reacts to the economy differently. Stocks and real estate are great inflation hedges because they tend to rise as inflation does. Bonds get hurt by inflation, so if you have stocks and bonds in your portfolio and inflation comes along, you're not going to see that big loss in money. On the other hand, stocks do horrible in a recession, while bonds hold up because they have that fixed cash flow coming in from the companies. So the idea of asset allocation is to smooth out your returns. Now, asset allocation depending on your age just means when you're younger and you have much more time to go to retirement, you can take more risk. So you have more in stocks, you have more in other risky assets like high yield bonds. As you get older and you get closer to retirement, closer to needing that money, you have to take less risk because you can't take that 50% drop in your stocks when the stock market crashes. So you put less in stocks and more in bonds. Our next stock market basic here is just maxing out the money in your retirement accounts each year. This is free money. The money contributed from your employer into your 401k account is money you didn't have to do anything for. All you had to do was invest normally. In IRAs and Roth IRAs, you get tax-free income growing in those accounts until you retire. Now we've got a special opportunity with these new tax cuts that just passed in 2018. It's likely your income tax rates are going to be lower for the next 10 years, but might go up in the future as the government needs to collect more money. That means go ahead and pay your taxes now, invest that money in a Roth IRA account, which you don't get that immediate tax benefit, but when you take that money out in retirement, it's totally tax-free. You never pay taxes on the returns in a Roth account. Now that means if income taxes do go up in the future, you've just paid taxes on lower rates today and get tax-free money in the future. Our last stock market basic here is investing in ETFs rather than stocks, or use what I call a core satellite method. Now, I love picking stocks. I love picking investments. It's probably not the best investing strategy, but it's interesting and I enjoy it. But I also understand that the best way to invest is through exchange-traded funds. These are funds that hold hundreds or thousands of stocks, and you can buy them with just one fee. So I can buy on my E-Trade account for just $5 a group of hundreds of stocks and not have to worry about one stock crushing my portfolio. Now, the core satellite method is a mix of only buying funds and picking stocks. Basically, you've got your core portfolio, which is maybe 50 or 60% of your money, the majority of it. You put that into broad index ETFs. Now, that's going to smooth out your returns. It's going to help you make those market returns and not worry about your money. You use the other 30 or 40% of your portfolio and invest in those individual stocks as you like. This is going to give you a chance to beat the market if you like, to enjoy investing and picking stocks, but most of your money is in those index funds and you're going to enjoy that market return. Now, just these 3 stock market basics are going to make you rich like picking stocks never will. Follow these 3 investing rules and you won't get sucked into a lot of that bad investing decisions people make because they're focused on the what of investing. You're not going to want to miss the other 4 videos in the Wall Street Lies series, so click that button to subscribe to the channel. I'm here every Monday through Wednesday with a new video on beating debt, making more money, and making your money work for you. Subscribe and then go to mystockmarketbasics.com/ask to get your money question answered in a future video.